traders, welcome to the TMT Stock Market Strategy video for Thursday, November 3rd. Markets continued to slide lower. We were looking for a little bit of a bounce. We did get a bounce, but the bounce was so weak, we really didn't want to start looking to get long that bounce. And that's something that you need to kind of master, is when you're counter trend trading, you're looking for an oversold bounce, because it does happen, and it happens rather quickly. It's actually really profitable if you can master that style of trading, at least on the on counter trend trading, that is. And we didn't get a bounce that was enough to meet its requirements for us to get long, and we do teach that here at Trading Market Technicals. So we are coming up with an upcoming webinar on November 16th. Check out the website; it's free. Believe me, guys, you're going to learn a lot by what we are going to show you. We have professional trading programs, and this is something that you can't afford to miss. All right. So anyway, we have a dead cat bounce that really didn't materialize, and then markets continue its slide. And really not a good spot to even get short. So we're looking for today. I am still looking for a bounce. We have one of our indicators here. You could see well, it's not an indicator. It's the index. It's the volatility index, the VIX. And we are outside of the band twice. We've closed twice outside of the band right now. We are looking for the VIX, the VIX, to come in, and as well as several other components that we use to look for a market bottom. Not being shown here on this video. So once this comes in, this price gets in below the channel, that'll create at least part one of a sell signal for the VIX, a buy signal for the market. And again, it would be only temporarily. Remember, the election is on Tuesday. Today's already Thursday, so there's only 3 days left before the election results, which will probably be in the wee hours of the morning on Tuesday going into Wednesday morning. But we'll see. We shall see. It's going to be very, very interesting. We are oversold in the short-term time frame and on the daily chart. So I am looking for some sort of a bounce, and nothing really of excitement. I'm not saying that we're going to look to at least challenge the highs. That's way beyond that reach. I do think that we are going to be headed lower, and even with the Hillary Clinton win, I do think that markets are going to realize that we're going to have gridlock in Congress unless something happens in the Senate as well. So we'll just keep an eye on things here, take it one step at a time, but that's what I'm looking for. I am looking for some sort of a bounce. Crude oil, great call that we had here. Don't buy crude here up at these levels after a move like this, just based on an OPEC member and non-member meeting coming in November 30th is just lunacy. Now, you could day trade this if you wanted to, but even then, there's so many headline risk when you're trading crude oil. Got to be very, very careful with that. But nonetheless, we did break down our key pivotal area of support, which was 49. We broke down and we met almost all of our targets, which was the 38 to 15 to 61.8, which comes in at 44. That's pretty close, guys. I mean, that is really pretty close. If we lose that, we're going to hit the 200, which is also close to this uptrend line, which will come in right around the 42.5. Okay, we're not even really quite overbought yet, so there is plenty of room here that we can move lower. RSI still got a little bit of way to go before it becomes overbought, so I wouldn't touch it here. I wouldn't really look to short it here either. For a day trade, possibly, but just be careful here with crude. I would like to see a bounce back up into the 50-day moving average, or somewhere up in here into the 46, 47, and then fail, and that's why you'd be looking to short crude oil. Gold benefited the last few days basically on its fear trade, right? I mean, gold was headed lower. It was just riding up the 200-day, and then sure enough, we had a blast yesterday with FOMC minutes that came out, and sure enough, gold popped pretty hard, and they're raising rates. So it didn't matter if they were raising rates a point, because of the fear factor trade came in. They really pushed them higher. So I'm still looking to see if gold fills. There's a gap fill area here, and that needs to be filled, and we're really close to it. So hopefully we get to that point, and then we'll see where it goes from there. All right, next is that 210.50 was taken out, as you all know. And here is one of our support areas for our TMT Premium Pro Trade Premium videos. You can see our resistance here. These are on daily, but we break it down into a real short time frame of 15-minute, so you can really trade off of these support resistance, which hold extremely true, guys. Second area here is 203. Is that gap fill here that I really want? More than likely, that's where price is headed. And again, not straight down. Doesn't have to go straight down, but it does. Within a bounce or two, and then a good flush, and then you got the Brexit lows here at 198.55, and I do think that that's ultimately where we're headed, back to the Brexit lows. So let's see what happens in the coming days and weeks. IWM just about hit our second target of 114.90. We're about 25 cents away from the IWM, but again, look for that next push of that 114.90. Next is going to be the Qs, and last you're going to see here hit our first target. I'm still looking for a 38% retracement of 112.81. And remember, Facebook came out, they beat top and bottom line, but their guidance from the street they did not like. They got crushed in the overnight by 10 points after hours. So that may hold back any little pop in the market, but we shall see. But definitely keep an eye on the Qs. 38% retracement is what I'm looking for. 112, even rounded off to 113 would be your next downside target. Hope it helps everybody. Hope you guys are doing well, and I'll see you tomorrow. Take care.